Okay, in this example problem, this is about how to account for trading securities. We can see here that it says Blue Company made the following transactions in the common stock of Green Company. On July 10th, 2009, Blue Company purchased 10,000 shares at $45 per share. On September 29th, 2011, they sold 2,000 shares for $51 per share. And on August 17th, 2010, they sold 2,500 shares for $33 per share. And the end-of-year market prices for the shares were as follows. And so we have that information here. And so what we want to do is to prepare the necessary entries for 2009, 2010, and 2011, assuming the green stock is classified as a trading security. So, our first entry on July 10th, 2009, Blue Company purchased 10,000 shares at $45 per share. And so, these are our journal entries right here. We have a credit to investment in trading securities of green stock for $450,000 and a debit to cash for the same amount. And it's pretty straightforward. It's $45 per share times 10,000 shares. That's all that one is. Our next transaction on December 31st, 2009, that is for this right here. It's an end of the year adjustment. So these are our journal entries for this. You have a market adjustment to trading securities, that's a debit of $20,000, and an unrealized gain on trading securities of $20,000. And the reason for this is the adjustment is made because at the end of 2009, the market value of the shares are now $47 per share, and they were purchased at $45 per share. So 47 times 10,000 is $470. So there's a $20,000 adjustment that's made to the market adjustment trading securities account. And the gain is unrealized, obviously, because we're not selling the stock yet. We just need to make that entry on December 31st. So our next journal entry is September 29th, 2010. And what it is Blue Company Blue Company sold 2,000 shares for $51 per share. So these are our entries for that. And we have a debit to cash for $102,000. We have a credit to realized gain on sale of securities of $12,000 and a credit to investment in trading securities green stock of $90,000. So the cash is just 2,000 shares times $51 per share. It's $102,000. That's the cash we received because we sold the stock. There's a credit to realized gain on sale of securities because the shares were purchased at $45 per share. So we credit the investment in trading securities green stock account for the book value amount, which was 2,000 shares at $45 per share. That's $90,000. And the difference right here is the $12,000, and that's what we credit to realized gain on sale of securities. So again, the investment in trading securities, that's the amount of the stock that we sold, the number of shares at its book value, which was $45 per share. Okay, now on December 31st, 2010, we have another adjusting entry. And if we look at this, the shares are now worth $39 per share. So they've gone down in value. Let's see, 2010. Okay, and so this is our entry. We have an unrealized loss on trading securities for $68,000 and a market adjustment to trading securities, a credit of $68,000. So on this, okay, this is a kind of a big explanation. So the shares were purchased at $45 per share, and we have 8,000 shares left. So that's sitting on our books at $360,000. And at the end of 2010, the market value per share has dropped to $39 per share, which gives us a total value of $312,000. So 360 minus 300 $312,000 equals $48,000. But the transaction on December 31st, 2009 raised the book value of the green stock to $470,000, and the sale of the 2,000 shares on September 29th, 2010 lowered the book value by $90,000. That left the value on our books at $380,000 instead of the $360,000. So the adjustment to get it to the current fair value of $312,000 needs to be an adjustment of $68,000, not $48,000. So make sure you understand that part. And these are just the accounts that we're debiting and crediting. So our next transaction is on August 17th, 2011. And on this date, we sold 2,500 shares for $33 per share. So this is our entry right here. We debit cash that we received for $82,500. We have a realized loss on the sale of securities for $30,000. We credit investment in trading securities green stock for $112,500. So the debit to cash is just the 2,500 shares times $33 per share. That's pretty straightforward. It's $82,500. The realized loss right here, it's realized again because we're actually selling the stock, and the shares are being sold below the book value. And so this is the book value of the shares that we're selling. We're selling 2,500 shares, and they are on our books at $45 per share, which equals $112,500. So that's that journal entry. And our last entry is on December 31st, 2011. So the value's gone down again to $31 per share. So this is our entry right here. A debit to unrealized loss on trading securities for $29,000 and a credit to market adjustment trading securities for $29,000. So the reason for this, and this is, it's the same idea as the last adjusting entry on December 31st. The book value of the green stock was at $312,000, and it was then lowered by $112,500 after the sale of the 2,500 shares on August 17th. That put the book value at $199,500. On December 31st, 2011, the market value per share is $31, and 31 times 5,500 equals $170,500. So the adjusting entry to get our book value of $199,500 down to $170,500 is $29,000. So that's the reason for this $29,000 right here.